Okay, I want to start off with a few key charts that would help me underpin this discussion as to why we are beginning to see the Bitcoin's decoupling effect from TradFi, from traditional finance. So we all know that the economies are predominantly reliant on inflation reading reports because that actually gives you an indicator for measuring the health of an economy. So you can see unanimously, as shown in this chart, that the majority, if not all of the countries listed here, are well beyond the 2% standard target. This is the key standard metric that countries aspire to achieve, which clearly, as shown in this chart, they're not. They're really well above inflation. What does this mean? This means we've actually ended the quantitative tightening and have now entered into quantitative easing, which means that there's going to be inclination for central banks to actually cut the interest rates. What is the repercussion of this? The central banks are going to be left with no choice but to start lowering their interest rates. You can see that the Federal Reserve have actually continued to reduce their interest rates by 0.25 percentage points. And you can see that the rest of the major central banks have actually followed suit. Increased liquidity made available in the market, in that there'll be more propensity to spend and make future investments based on lowering interest rates, where we're going to expect to see increasing amounts of capital inflows into Bitcoin and other leading assets. So this is great news all round. And I certainly see this trend of interest rate cuts to continue for quite some time. You might have heard in the news that Trump have instigated this, in my personal opinion, one of the worst policy decisions, even though he's actually warned us that this is going to happen. Indeed, it has happened. And this is the actual aftermath effect. So you can see that the above post-tariff chart captures the acute market response since President Trump's April 2nd announcement of this sweeping trade penalties. You can see within days, the oil prices collapsed by just under 21%, which is shown by this dark grey line along this chart, which is followed by the S&P drop of 10.23%, shown in this line here, the penultimate line. And Bitcoin, strangely enough, actually have encountered the least drop out of the two, just 7.3%, 7.34% to be precise, during that period. And of course, you can see that bond prices have also declined, down 2.42% and 2.58% respectively, reflecting the upward pressure on yields. Gold, on the other hand, which is often seen as a traditional safe haven asset, have also witnessed a retreat of 2.83%. So what's the reading from this chart? It shows that although Bitcoin's relative positioning have actually dropped than S&P and oil, but more than bonds and gold, it actually shows that despite the strategic reserve narratives, it remains partially tethered to broader macro volatility under the acute market stress. So in other words, Bitcoin has endured the least drop if you compare it with the S&P 500 and other major indices out there. Ever since the inception of the 11 US Bitcoin spot ETFs in January 2024, you can see that there's been this continual exponential demand for capital inflows into these 11 Bitcoin spot ETFs. It's actually totaling around just $35.5 billion. But of course, this doesn't take into account of the rest of the overseas Bitcoin spot ETFs out there. Certainly closer to the 100 billion global figure, which just gives you that comfort that institutional adoption is still on the rise, and I suspect that it's going to continue to do so, and even more so due to the scarcity shock that we're going to see in the months and years ahead of us. Interesting chart here about Bitcoin's volatility and correlation with the actual equity stock markets. Now, a lot of people, in my view, confuse volatility with risk. For me, volatility is a healthy dynamic, particularly for a brand new asset that's just starting out, which is the case with Bitcoin. It's a young 16-year-old commodity, and it has a small market cap of just above $2 trillion US dollars, and it's more likely to experience high volatility as indeed new capital flows into the asset. Bitcoin has been no exception, with regular volatility in the triple digits. However, as the asset class matures and its total market cap grows, the inflow of capital is expected to have a small impact, because at that point it will be flowing into a larger capital base. In other words, new capital inflows will not necessarily move the market or the marginal buyer or seller as much, which makes total sense, right? So Bitcoin's volatility has declined, we can say that, and it will continue to decline even further in the months and years ahead. The volatility of Bitcoin, which is measured by how much of a Bitcoin's price has fluctuated relative to the average price in a period of time. You can see that other major currencies average between 0.5 and 1%. So you can see that the current 1.76% isn't at all far off with the volatility of gold average around 1.2%, which means that the volatility curve is certainly going down and it's set to continue to drop as the asset class matures into the mainstream. I want to also talk about some other milestone achievements which I have actually in previous episodes of mine in my channel, which is all the more reason why you ought to subscribe. So this is important because it has actually begun as a Wild West token, as with many cryptocurrencies in their day, right? It's always been started out as a high risk, extremely highly volatile crypto token, which it wasn't really clear at the time in which direction it was heading and what was its unique selling proposition. We all know that we're 16 years into the asset now. There's been some ups and downs, as with any other asset class. And so for me, the major milestones that I listed here are the key that you ought to take note. Leaving aside whether you like him or not, ever since the arrival of President Trump back in office, he's been a pro-crypto, pro-business, pro-Bitcoin president. The hostility that was once there under Biden is no longer there in terms of the digital assets industry, the innovation coming back into the US, the investment, the capital inflows. It can only spark good news for the crypto industry at large. So that's the milestone of what has been achieved. We've also been seeing, even to the run-up of the elections, individual states in the US to have incorporated Bitcoin reserves and including allocations of their state pension funds into Bitcoin. We are all familiar the accomplishments of MicroStrategy, now called Strategy by Michael Saylor, in acquiring Bitcoin into its corporate treasury reserve on their balance sheets. And we are seeing there's over 100 publicly registered companies now who have actually followed suit and have copied the MicroStrategy playbook, which is to incorporate the Bitcoin standard on their balance sheet. So a major accomplishment there. I already talked about the next point around the cheap money era. So we're going to continue to see further interest rate cuts, which would mean more liquidity being made available in the financial markets, more investment. That can only mean there will be more investments made in the crypto industry and in Bitcoin. And that train of thought is set to continue. The next point around financial advisors, they're under pressure to increase the allocation of their client portfolios from 1-2% to even higher rates of allocation, even up to 5, 10 or even 20%. Banks will now offer clients to trade and custody Bitcoin, and this is going to continue. We all know about the executive order that's been signed by President Trump, announcing the US adopting the Strategic Bitcoin Reserve at a federal level. But we're still waiting now for the actual Bitcoin Act bill, which is managed by Senator Loomis, to achieve a bipartisan ruling of the Bitcoin Act. So this is still in its implementation phase, if you like, but I'm very confident that this is going to pass through. We all know that Trump would like to establish a digital assets regulatory framework in the US, particularly starting with stablecoins, because that will provide more of a low-hanging fruit and clarity for managing stablecoins, particularly to strengthen the dollar dominance in the world. That's really the bottom line. But he's going to do this for the rest of the crypto assets out there and for Bitcoin at some point. So good news on there. The penultimate point here around in-kind ETFs coming soon. This is very important because in order to avoid taxes being levied for, let's say, when you sell off the ETF shares on the Bitcoin spot ETFs into fiat, well, there's going to be tax levied at that point. So you're going to be subjected to capital gains. Well, by introducing in-kind ETFs into the Bitcoin spot ETFs, you're going to be effectively removing any taxes and allow the swapping from one asset, crypto asset, into another, in this case into Bitcoin, without imposing any tax obligations or capital gain. And I expect this to happen fairly shortly if it is not done so already. And lastly, for me, what would be the end game for Bitcoin is the creation of Bitcoin-backed financial products, because I give you one clear gap that is very obvious for me. I'm a Bitcoin holder. I want to not be in a position to sell off my Bitcoin holdings, which I have in my cold wallet, in order to start profit taking and enjoy, which I would expect to see a significant gain at the end of my holding period. I don't want to be in a position to have to sell any of my Bitcoins off. Why would I? So clearly there is that gap in the market, and there's starting to see some new Bitcoin-backed products to effectively address this gap in the marketplace. So this is going to happen because products that are veering towards Bitcoin collateralized loans, so you can use Bitcoin as your collateral and issue out loans based on that without having to resort to securitizing your home, if you like, in order to get a loan. So that's just one example, but there are other types of financial products, even yield products on your Bitcoin holdings without having to sell any off, and you get premium. And even there isn't a talk about tokenized Bitcoin-backed securities in order to increase the rate of attractiveness of the standard US government bonds, which typically yield a much lower interest rate. So when a bond matures, well, it doesn't really return that much of an interest rate to the investors. So by securitizing, let's say, US Treasury bonds, if you add the Bitcoin component, if you hold it to the 10, 20, 30-year bonds, which is ideal because at that point we are fairly confident that Bitcoin is going to appreciate quite significantly, which means that it will be a win-win situation for governments to earn money and capitalize on the accretive difference between the interest rate payment obligation that they have to pay back to investors versus the market value of the Bitcoin price itself at the end of that bond tenure period. That is a very good example of how Bitcoin-backed financial products can provide a win-win situation to the issuer and to the investors. So I expect these type of financial products to come out more onto the fold in the months and years ahead. And for me, this will be the ultimate game changer, because mark my words, when this happens, we are fairly confident that Bitcoin will be into the millions worth per coin at that point. So what is the call to action here? What is the summary? We all know that Bitcoin has long been seen as a highly volatile asset. That's without question. But as with new assets, they typically take time to undergo price discovery, maturity, and then settle into lower volatility at some later stage. It has to happen. Even gold experienced high volatility when the US came off the gold standard in the 1970s. So in its mere 15 years of existence, Bitcoin has shown signs of maturity. Bitcoin volatility has seen new all-time lows on a yearly scale, and Bitcoin has also just reached a full year of weekly volatility below 75% for the first time ever. There is a clear downward trend in volatility for Bitcoin over its lifetime, and we certainly believe this trend was set to continue as Bitcoin continues to mature over time. So that is the message I'd like to leave you today. If you park some of your wealth into Bitcoin now, because at some point it's certainly going to explode in value for the reasons I've just mentioned to you. So if you enjoyed today's episode, please don't forget to hit the like button and to share the video to friends and colleagues at work. And if you haven't done so already, please subscribe to my channel, as I regularly publish some interesting videos such as these, anything to do with Bitcoin, blockchain technology, and the future of finance. So till next time.